Alejandro's going to go through Bitcoin, its history, why it was created, who created it, and why does it even have value. It's very important to know Bitcoin and understand it, to understand, why now we have so many other cryptocurrencies and so many other projects. So Bitcoin is definitely the baseline. It's the ground. And then everything else just kind of, was built upon Bitcoin and the history and how everything was, came about. So Alejandro, I'll give the microphone to you.
So everybody knows about the OG, Bitcoin. When you think cryptocurrency, don't even think crypto, they just think Bitcoin. Nothing else really comes to their mind. It's obviously it's because it's the first cryptocurrency that was ever created. It's honestly revolutionary technology. For several decades before Bitcoin was created, which was in 2009, just 1 year after the 2008 financial crisis, people had been talking about cash for decades already. You know, um, with the internet coming up, that just was like a natural thing that people were thinking about. The world was moving towards technology. So, so
No audio.
Alejandro, you're mute.
sorry. Um, there was no real okay, I'm not sure actually when I got muted, but so for the last few decades, people have been trying to create a digital cash, right? But there had been no secure way to actually do it. They just couldn't figure out the problem, and that's until blockchain came along. And blockchain is the reason that we have Bitcoin. So in 2009, a guy by the name of Satoshi Nakamoto, and I say a guy, but it could have also been a group of people. The thing is, nobody knows who Satoshi Nakamoto really is. So in 2009, this guy Satoshi Nakamoto, he published what's called a white paper, just outlining what Bitcoin is, what it's meant to do, and it was basically his gift to the world. Um, and people were very skeptical of it in the beginning. Of course, people are afraid of new things. Like even now, people are still afraid of it because they don't understand it. And even the people who understood it back then were skeptical of it. But then, people started slowly realizing what this really was and the crazy value that this has. And the real value isn't just Bitcoin itself. It's like I said, it's the technology behind it, because no one knew a way to properly secure Bitcoin. And blockchain is really the big game changer. Because if you guys have heard of other cryptocurrencies like Ethereum, maybe Polkadot or Algorand, those all work on the same technology that Bitcoin was built upon. So Bitcoin really opened the floodgates to what crypto is today, and like all the different kind of cryptocurrencies that are around today. So, Satoshi's philosophy when he created Bitcoin was take power away from the banks. In 2008, the banks destroyed our economy with the housing market, and it was just so destructive. It took away people's wealth. People lost tons of money, and what he essentially wanted to do was to start trying to take away some of the power from the banks. So Bitcoin's philosophy and Satoshi's philosophy is essentially where you get to become your own bank. Thing about crypto is, if you guys have heard of wallets, if you have a wallet, you can hold your currency yourself. You no longer need to go to the bank to deposit it, where the bank doesn't necessarily guarantee you that all of that money is yours. Because as soon as you deposit that money into the bank, it's technically, I mean, it really is just an IOU. The bank, the way they make their money is by lending money out. So that means they don't need to necessarily have all of the cash in their reserves. And although bank runs are very rare, a bank run is essentially this mass panic. People go to a bank to try to withdraw all of their money, and then the bank suddenly says, "Well, we're out. We can't give you your cash." This doesn't really happen. It did happen a long time ago. Um, it has happened once in the history of the U.S., and it was absolutely a catastrophe. Um, so we got to stop relying on banks. Is the bottom line of why Bitcoin exists. That's why it was created. We have to completely stop relying on banks that are manipulating the markets, that have crashed our economy back in 2008, and it's giving people the power to lift themselves up and really give themselves the financial tools that they normally wouldn't have in a classic system to grow wealth. So a little bit about blockchain. So blockchain, the reason that it has security is because the network itself is spread out around the entire world. So I'm sure you guys have heard of Bitcoin mining. If you guys don't know what that is, I'll go ahead and explain that. So the way that it's secure is it's secured by the miners. So imagine so blockchain is essentially a decentralized system. It means that it's not in just one place. So imagine something like Facebook. They have a headquarters, and somewhere in their headquarters they have a server room, and they have all of these computers that are storing all of the data that's created on the Facebook website. And that's all stored on all these different computers in just one central location. Everybody's Facebook profiles, the messages they've sent, your grandma's Facebook feed, all the garbage that everybody's putting out on Facebook, that's all in just one central location. So the way Bitcoin works is that it's distributed around the entire world, and each little computer that you'd see in that Facebook server is actually a computer that you could have at home where you're mining Bitcoin. So essentially, the way that it works is just when everybody that mines, the reason that they get Bitcoin is they essentially help the transactions be confirmed. And classically, the bank would be the one confirming your transactions and maintaining all the transaction history. So that's really how Bitcoin is created. Is you help the network run and you get Bitcoin. And that's why Bitcoin exists. And the reason that it has value is because of the security. It's unhackable. So the network itself cannot be hacked. And that really is just a problem that was finally solved by Satoshi Nakamoto. And that's essentially what Bitcoin is. It's a way to take power away from the banks, and you can mine Bitcoin, you can make money that way, and that's basically what Bitcoin is. It's this, like, to me, it's this like beautiful new thing that allows us to hold our own wealth. We don't have to go to the bank anymore and rely on these people anymore, and that's the reason why it exists. And Bitcoin is very elementary technology, which has led to new different kinds of cryptocurrencies. So you can go ahead and go on to the next slide, and I'll explain to you guys some different type of cryptocurrencies that there are.
I'll summarize a little bit, and I think a definition will kind of help those that didn't fully understand. So when we say a blockchain is a system in which records transactions, right? And it's across several computers. So the reason why Bitcoin is so safe is because it's run through a network, and the network is worldwide. So you're not going to one bank. They're, essentially kind of just saying, okay, I owe you this money. And if they don't want to give it to you, then there's a problem. But when you take it into the whole blockchain and everybody knows what's going on, it is safer and more secure. So I think the basic just blockchain definition makes you understand that it is completely different than just banking. It's different than banking. It's run by us, right? And that's essentially the whole point of it, is that the power is in our hands. We're able to do what we want with our money. So we'll go ahead and advance to the next slide. And I'll go through this, very quickly. So, and then Alejandro could go down the little rabbit hole, but blockchain basics. So there's different types of blockchains. There's transactional and there's smart contracts, right? Bitcoin, Litecoin, and Nano, they're transactional blockchains. So you're only able to send and receive Bitcoin, Litecoin, Nano. And then there's smart contract blockchains, which are Ethereum, Binance Smart Chain, and Algorand. And you're essentially able to build decentralized applications on these blockchains. And so that's why Ethereum is it's so big, and it's because you're able to do this, you're able to build these things on the blockchain compared to Bitcoin, where it's just transactional. It's just pretty straightforward. Is I send money to you, you send money back, and that's the only thing it can do. So Alejandro, you can add.
Yeah, sure. I mean, so like you said, Bitcoin is very basic stuff. Bitcoin, Litecoin, and Nano. And the reason some of these actually exist is that they wanted to kind of become the new versions of Bitcoin. So, Bitcoin is transactional. You can only send and receive money. And to do that, you also need to pay a fee, because the people running the network, they're running their computers 24/7 to keep the network running, and they require an incentive. So on top of the Bitcoin that they mine, they also get a little bit of a fee. The thing about Bitcoin is that those fees can get very high. When there's a lot of people using the network, it gets congested, and the miners will start to require more money for the work that they're putting in to keep the network running. So what Litecoin and Nano have done is that they tried to solve that issue of expensive fees. So Bitcoin, again, first cryptocurrency, very basic technology. Litecoin came in and they changed the way that the network runs, so you get significantly cheaper fees. On Bitcoin, some of the highest transaction fees that you could see are $50, which is insane. If you want to send somebody $10, having to pay $50 in fees is ridiculous. The fees are significantly lower now, but paying $5 to send $5 is still ridiculous. Litecoin changes that, so they're significantly cheaper. The transaction fees are less than $1. And then Nano, what they do is they have a feeless system. So you can actually send somebody $1 and not pay any fees at all. Zero. So that's the really cool thing about, these different projects. They're really trying to constantly build upon what Bitcoin originally started and try to make it better. And when you're seeing, I always say in the group chat, you guys have probably heard me say this a lot of times. When I see a cryptocurrency project that's trying to fix something that is wrong in crypto, I see that personally as a good investment. And I mean, I would consider some of these safer investments. Litecoin, again, is one of the biggest cryptos. Nano is in the top 100. And that's really what these transactional cryptocurrencies are. And then Sahid said, Ethereum, one of the reasons that it's so big is because you can build applications on it. You can't build applications on Bitcoin. And these applications, they're normal applications. The only difference is that they're interacting with the blockchain. So they make it so that you can send cryptocurrency to each other. Imagine that you're playing a video game, and in the video game you can get rewarded in crypto. There's actually projects out there right now where you can have Call of Duty tournaments, and for every kill that you get a little bit of crypto. And that's just connecting the blockchain to applications and video games. There's crypto projects that are working on gambling. So where you can download an app on your phone and it connects to the blockchain, and you can get crypto that way as well. There are a lot of it's just an endless amount of things on Ethereum, Binance Smart Chain, and Algorand. And these are just the different types of smart contract blockchains. And smart contracts are really just a type of program that automates everything for the blockchain. So if you guys ever hear smart contract, it's really just a very technical term for just a program that automates everything. The one of the biggest prospects that I also look at with this automation is further down the line, if you're able to build a a software that exists on the blockchain, and let's say you're working, you know, typically you get paid at the end of the week. Maybe you get paid weekly or you get paid bi-weekly. But imagine a future where a smart contract that automates everything pays you at the end of every hour. So as you're working, you clock in at 8 a.m. and at 9 p.m. you have your first little bit of your paycheck. And then at 10 p.m. you have another little bit, you know, because it's automating everything. You no longer have to go through a third party company where they're doing everything, they're processing all the payroll, and it's taking them, you know, the whole week to process everything, and you wait for yourself to get your paycheck. Then you can potentially get your money immediately, because now your company doesn't have to deal with anybody else. They can just deal with a program that exists directly on the blockchain, and they can just automate everything. I see that somebody has their hand raised.
Yeah, I want to make sure that, you know, people ask questions, because
Yeah.
essentially this is, you know, getting people to understand what it really is. So questions would be great. That way we can narrow down and answer those
Yep.
things that people don't know. So
I mean, I'm basically done explaining some of this. I mean, if you guys want to ask some questions about, you know, some of these different cryptocurrencies, or maybe some of these cryptos that you see up here on the screen, you can just go ahead and ask a question. So I see Stephanie had her hand raised. If you want to go ahead and
Alejo, so you were saying that Bitcoin, Litecoin, and Nano are basically just used for transaction purposes.
Right. So
and then Ethereum, Binance Smart Chain, and Algorand, it goes in deeper.
Right.
Like it keeps like a record of like everything.
Right. So did you? So yeah, I mean, did you have a particular question about that, or
Difference between them?
that's the only difference. Yeah, there's two different blockchains. There's transactional, it's smart contracts. That's pretty it.
And yeah, I mean, the smart contracts are, you know, you can build applications, and because of the automation of the smart contract, the application is able to do everything on its own. So it becomes decentralized at that point, where not just one person or a group of people have to control it. They just built out code, they write out code, and the code takes care of everything automatically without you ever having to touch it again. That's the beautiful thing about smart contracts. And that's why some of these cryptocurrencies exist, because people saw the potential of what blockchain is. With, you know, blockchain, you don't need a central authority, you know, taking care of everything. You can just write a smart contract and it'll take care of everything for you. So that's why smart contracts exist. I see Sebastian with his hand.
I'll add a little more just to kind of break it down in the terms of the use case. Because everybody's like, okay, like, why should I invest in Bitcoin and these cryptocurrencies?
Right.
So essentially, so I want to use an example, for example, with smart contracts and Ethereum in terms of real estate, right? So with real estate, a realtor has to get so many different people in line in order to close a deal, in order for a house to get sold and bought. For example, you have the title company, right? You got to make sure that things are done with the title company, and you have somebody personally do everything. Well, with blockchain, it's going to be like titles, and these things are going to be stored on a blockchain, and it's straight up just going to be transactional. There's not going to be any wait times. There's no error. That's very key. There won't be any error, because it is all computer based. It is all network ran. So there's very small chance of it being any error. Now with Bitcoin, so Bitcoin, obviously it being the first one and it being the absolute safest in terms of investing, that is a store of wealth. That's where you park your money and you keep it, because Bitcoin is an asset that is growing at 200% per year in the last 10 years. So this year, for example, right, those people that are just coming in and are investing in it, you see that maybe a month and a half ago, you put in some money, it was at 64 and it dropped 50%, and now it's in the 30s. It's like, okay, what's going on here? And it's because people are seeing the micro, the small situation of what's going on in the last 2 or 3 months. But macro wise, the bigger picture, in the last 10 years, Bitcoin has increased 200% every year. So you're essentially investing into an asset that's going to grow you 200% per year. And then these other projects, obviously, they're appreciating as well as there's more adoption, as it's more used. We saw that, for example, Bitcoin got adopted in El Salvador. So that's adoption happening. So that's essentially what we want. And then these other cryptos come into play, and all they do is they just offer better technology, cheaper fees. Essentially, it's the same kind of blockchain programming. You're just using it differently and different ways and using it differently. So we'll move into like where you can get cryptos, the differences between centralized and decentralized, because it's an issue that I think people come across. Like, what is the difference? Like, some people don't understand that. And we'll take some more questions before we go forward.
We have 2 questions right now. I know Sebastian's been waiting for a little bit, so you can go ahead and ask your question, Sebastian.
Oh, hi. Can you guys hear me?
Yeah.
Hi. So I just had a quick question. I know with how stocks work and stuff like that, well, kind of like what you guys look at, which would be like the 3 components, which is like the fundamental, the technical, and then the sentimental.
Yeah.
How would you guys read, like, for example, for the Bitcoin, is there kind of like an analysis, or like what, like how would you guys kind of decipher, like, okay, this stock is probably going to be doing good at this time, or this and that? Is there like a way where you could kind of I would say kind of like a cheat sheet in a sense, to see if the stock is going to be become better or worse?
So I guess I could go first, Alejito. So because I'm so familiar with stocks and the price movement. So stocks, you got to remember too, stocks is based on companies, right? It's based on the performance of a company, what the company is doing, what they have going on. And Bitcoin is essentially just something that is just being adopted. It's in the early stages. It's still being used. People are still kind of getting in and out of it. So in terms of there's no prediction. That's another thing about crypto, is that you can't really anticipate the behavior, because obviously with what's going on right now, it's more like you're diving into a rabbit hole of manipulation and all these things that are going on. And that's why we're here. We're here to educate that and help people understand that, just like stocks and just how people manipulate stocks and just how we have, pumps and dumps, that happens in crypto as well. But the bigger picture, talking, 5-10 years from now, and even looking back 5-10 years from now, it is only appreciating. It may be manipulated and it may go up and down as of right now. But me, like, it's hard for me to say, hey, this investment is something that you want to kind of play with in terms of having a cheat sheet where you're going to make money, quick or whatever. For me, since my strategy is very just long term, this is something that is going to be adopted as years go by, and people are going to use it and it's going to appreciate. I'm not really looking for the short picture, because it is so like unpredictable. And we're seeing that right now. You can, technically, like, using charts and technical analysis, you can predict certain movements, but that's essentially taking a full-time job where you're analyzing this day in and day out. And it's something that's 24/7, because obviously crypto market is open 24/7. It doesn't close. So you're essentially trying to be looking at where it's going to go all day, all night, compared to stocks. So stocks is just, it's based on a company. It's based on how the company performs, what they're doing. And Bitcoin's what it is essentially, it's based on adoption and based on its growth, and who really believes it or not. And there is manipulation going on. The price of it going the way that it's going is just manipulation. Does that answer your question?
Yeah. Oh, sorry.
No, I mean, well, I was gonna say I could dive just a tad bit deeper in like what you meant about like technical fundamentals and like sentimental. But I mean, in crypto, there's actually like I could send you, if you DM me a little bit later, I could send you some or I can go ahead and put some info in the group chat. I'll send some resources
Yeah.
uh, on the fundamental stuff and sentimental stuff. Technical analysis, it's the same across all markets. It's existed for hundreds of years actually. Um, and if you know technical analysis, it works based off of like human emotion. So everything with to do with money is human emotion. So that does follow the same across all markets. Um, the thing about with crypto, like Sahid was saying, there's a lot of manipulation because it's still a relatively small market. So it doesn't really take a lot of money to move markets. Um, you know, there was some talk about the recent crash that we had, that took us down to the 30,000 level, where there were some big investors that just poured money into the market and just crashed the price, And if Bitcoin itself could be manipulated that easy, that means, I mean, that's just an indicator of like how early we really are, because, you know, those potentially weren't like the biggest players in the world. I know that banks, they manipulate prices of currencies, of world currencies, and that takes billions of dollars to do, banks have been caught doing this, manipulating currencies. So in crypto, it doesn't take billions of dollars. It takes significantly less. So there's a lot of manipulation. There's an incredible amount of volatility because of the fact that, money, not really, really big money, but smaller amounts of, money in the smaller millions can move markets so easily. There's an incredible amount of volatility. So at certain points, your technical analysis is completely just thrown out the window. It can be working perfectly for you. You can see the charts lining up, all the lines looking good. And then all of a sudden, a big whale, like Cesar just said, the whale factor. A big whale can come in and destroy your currency. And that's happened to me plenty of times, especially when you start investing in micro caps. Um, Micro caps are like cryptocurrencies with smaller market caps, just smaller markets, the really tiny ones. Any big whale can just come in and just destroy that coin. It happens almost every single day in crypto. That's an everyday thing. When it comes to fundamentals, like Sahid said, it's really looking to me, and I guess Sahid as well. It's really looking for things to the long term, seeing like what really brings value in cryptocurrency. It's one of the reasons that I personally don't believe in Doge, because I just don't see it as a long-term investment. And it's because a lot of people also don't understand the fundamentals of Doge. One of the fundamentals that you have to look at in cryptocurrency is tokenomics. So tokenomics are just token economics, and it just means looking at how much supply there is in the market, looking at how that supply is distributed, um, what is being used with those tokens, the actual use case, because a lot of cryptocurrency projects exist where realistically they don't need a token, they don't need a coin. So it makes you question the validity, sorry, of that project and that token, and whether it's going to be around for a long time or not. Like I said, I've been in crypto for years. I have a little mug right here um, with a bunch of different, crypto tokens and coins. And if I were to really go through this, I'm sure I could cross off maybe 50% of these, because if you're not a solid project, you don't have a good team, you don't have real use case, you're not going to last long in cryptocurrency. I've seen it happen so many times. The thing with Dogecoin is that I'm sure a lot of people don't know this, but around, I want to say about 30-ish% of the supply is in the hands of 10 people. That means 10 people can manipulate the price, and the millions of people who are investing in Dogecoin, all of their money are in the hands of 10 people. And in the top 100 wallets of people who hold Doge, they own about just a little over 50% of the supply. So that means, again, on just 100 people have in their hands, you know, the way that Dogecoin moves, they have in their hands everyone's money. And Dogecoin was initially created as a joke. So take that as you will. It does have a viability to potentially be a currency because it does have cheap transaction fees, fees that I was talking about earlier. It's completely hype driven though. So if anybody puts their money into Dogecoin, it's just like something that you're just gonna gamble with it. I mean, I've put my money into Doge, like $50 that I don't care about losing, just seeing where it goes. Have a fun little play. It's like going to the casino. So you want to look at projects that have strong fundamentals. Like I always say, I try to look for projects that are solving issues. Like one, for example, you can get loans in cryptocurrency, but you don't have credit scores in crypto right now. There's a project that I'm personally invested in. It's called Bird.money. It's a very incredibly risky investment because it's one of those micro caps. But it is solving the issue of no credit scores available. So those are the kind of things you want to look for in fundamentals. And as far as sentiment goes, if you see, everybody thinking that something's gonna dump or whatever, you just go with the sentiment. If everybody's afraid, when there's fear in the market, that's typically the time to buy. And that's really the way I go about, looking at all those different things. So
I also want to add the fact that we have to understand that the banks and the banking system are looking at this like we are in big trouble. So obviously, when you first turn your TV on and you look at the news, all you're going to see is a very dark cloud over crypto and why it doesn't work and why it's not good. But because these people, and I think we also have to understand, for example, the people that make up the government, right? The people that are in charge of making the decisions and accepting crypto or not, they're old. They're 65, 70-year-olds that, they don't really understand this technology. I mean, we're also learning it as we go. So we don't really understand it as well. So these people are getting something presented to them. Like, for example, when our grandparents got the internet presented to them, they didn't understand. They didn't get it. Some were like, you know what? Like, I don't understand. I don't get it. I'm not going to get into it. Fast forward till now, they have no choice but to use it. And that's essentially what cryptocurrency is. It's something that is fairly new. It's something that, it's going to be revolutionizing. It's going to change the way we do things. And you're going to have banks, put a dark cloud over it because they're afraid. They're afraid. You're not going to be parking your money at a bank anymore. You're going to be parking your money in a wallet, in a trust wallet, or in a hardware wallet like a ledger. We'll get into that later on. And you're going to have control of what you do with your money. You are going to literally be able to lend it out to whatever you want to lend it out to, and you're going to have full control. So for the banks to see this, they're just going to put a dark cloud over it. And then behind the scenes, we have banks adopting investment opportunities for, wealthy clients. For example, Wells Fargo, starting this summer, they're opening the door to people being able to invest in Bitcoin, right? We also have 401k, talking about potentially giving people the opportunity to put, their 401k money into Bitcoin rather than to something else. So these are the things that, are important for us to know and understand, rather than just click the TV on and see, oh, Bitcoin has dropped this or this has happened. It's just like news. It's like Fox and CNN, right? They're going for the party that is on their side. And banks and the government, they're essentially seeing this as a problem because we're getting the power. We're going to have the power to do what we want, what we please. And it's also solving the problem of us being able to send money back and forth to people in different countries. So for example, me, my family's in Colombia, and sometimes I want to send my grandfather, some money, and I got to go through a horrible experience of going to the bank, waiting, having to pay, and then he doesn't even get his money, in that moment. He has to wait a couple of days. And this is essentially changing that, is shifting the way we do things, is shifting the way we're going to operate, is shifting the way that we're going to be able to manage our money. And you got to understand and be very cautious with that, because, a lot of people that don't understand and don't get it, the first thing they look at, is for my family, for example, the first thing they read is what they see on the newspaper, and it's nothing but bad things about crypto. And that's why we're here. This is why I'm here. This is why I'm here to tell you guys what it really is, the actual news, what's really going on, and the change that is happening. And for those that live down here in South Florida, we obviously seeing it firsthand. American Airlines Arena, no longer American Airlines Arena, it's FTX Arena, and FTX is actually a cryptocurrency exchange. And then there's other projects and other stuff going on in Miami, and Miami's adopting it. The mayor's all for it. The mayor even has come out and spoke about how he owns Bitcoin and Ethereum himself. So this is what we need, and people need to realize that, and people need to see that, rather than get caught up in what the banks are saying and what the government is saying, because essentially we're trying to shift away from that, from the government, from us being restricted to doing what we want to do. And we'll get into that in terms of decentralization and centralization on the difference. And we're going to that slide now. And I guess I could get into that, and then I guess Alejandro could help me out. So when it comes to where are we going to buy, where are we going to invest, we have two different routes. We have centralized and decentralized. Centralized is, for example, Coinbase, crypto.com, KuCoin. And as you can see here on these points, it's one single entity controls it, right? So only one person is in control of it. Exchange controls your funds. So like, for example, with Robinhood, and we saw this with GameStop, people at one point wanted to buy and sell their GameStop, and they couldn't do it. Why? Because Robinhood had control and can control what was going on. And so that's the thing that happens with centralized. And it's not anonymous, right? They know you, they know who you are, they know where, they know everything about you, and hacks and server downtimes, right? So decentralization. So these are, for example, some of the applications that we were talking about earlier that are built on the blockchain, like Ethereum. For example, Ethereum, Uniswap, SushiSwap are on Ethereum, while PancakeSwap is on Binance Smart Chain. So these were built on those blockchains, and here we have no single entity controls it. So no one's in control of what you do and how you do it. You go and put your money there, you're able to invest it. And we have this very important key right here that says government resistant. So let's just say, for example, the government comes out and it's like, you know what, we're going to restrict absolutely everybody that invested into crypto. And they're going to go after the centralized exchanges. They're going to tell Coinbase, crypto.com, KuCoin, hey, this is what you're going to have to do. And the thing is with those centralized exchanges is that they're okay, and they're accepting, and they're willing to do what government is going to say. And decentralized is like, you're in full control. You do what you do. You go. It's anonymous. Nobody knows about you. Nobody knows about what you have going on. And so that's essentially what we're trying to shift towards, right? We're trying to have full control. And centralized, yeah, you go into Coinbase, you buy your cryptos, and you want to make sure you take it somewhere where it's safe and you don't have any risk of government coming down and putting a law, or saying, you know what, we're going to halt this, and now you're unable to do what you want to do with your cryptos and your money. And Alejandro can add. I know he loves decentralization, so he can add on that.
Oh yeah. Yeah, I gotta tell you guys, I absolutely do not like using any of the centralized exchanges personally. I mean, it's because I'm such a crypto head. I'm a crypto nut. I believe in like holding your own wealth. So none of the cryptocurrencies that I hold are on any exchanges unless I'm not able to safely put them somewhere else, or I see an opportunity to make some money by earning some interest, which is something that we can talk about. We're going to be talking about in the future. So the other thing about the centralized exchanges, they also offer different fee structures. So one thing that people don't know about Coinbase is that there are two different exchanges for Coinbase. There's Coinbase, and then there's Coinbase Pro. Both are available for free. Except on Coinbase, you get charged about a 1.5% fee for all of your transactions. It's 1.5. And if you use Coinbase Pro, it's for more advanced users. You get charged a 0.5% fee. You see the massive difference between 0.5 and 1.5%. And if you're buying in the thousands of dollars, you should really start to notice the difference. The reason I don't use centralized exchanges is again, like I just like to hold on to my currencies. Decentralized exchanges, you can interact with them directly from your personal wallet. Like he said, they're decentralized. No one can control them. I just personally like that. The only thing about decentralized exchanges is that the fees they can be significantly higher, but they also allow you to buy cryptocurrencies that you're not going to find on centralized exchanges. A lot of if you've ever noticed, like when a new coin gets listed on a centralized exchange, it's because it has the majority of the viewers. I'm sorry, the majority of the investors. So you can buy yourself a tiny little cryptocurrency on a decentralized exchange that already exists on the blockchain, like maybe Ethereum or Binance Smart Chain, and you can wait for it to get listed on a centralized exchange like Coinbase or KuCoin or Crypto.com. And usually, what happens is when they touches those exchanges, because they're so big and they have such a big name behind them, and the majority of the users are on those, you see like a 50%, 100%, 200, sometimes even 300% move within the hour of it being listed. So I am invested in a lot of micro cap coins, the tiny ones, the little gems that you can potentially make significantly higher returns on, but you're also risking an incredible amount. Is the reason I like to use decentralized exchanges. But there are a lot of risks that come involved that really come with both. So if Sahid wants to touch a little bit about some of those risks, you can go ahead and pick up on that.
We can see here with the risk and centralized exchanges, you have hacks, your assets are controlled, like I mentioned earlier, and it's compliant to regulations. So like I mentioned earlier, with the government coming down on Coinbase, for example, and halting trading, Coinbase is going to be compliant with those regulations. So they're going to do as the government says, and they can limit activity on trades. So that's what happened with Robinhood and GameStop, right? When it was time for people to buy or sell, they were halted and they weren't able to do that. They were limited. Now with decentralized exchanges, you also have a risk of getting hacked and rug pulls. And you know what, Alejandro can explain a little bit about that in terms of the rug pulls. And we had an example earlier this week, but we don't want to confuse anyone. So Alejandro, you can talk a little bit about that rug pulls and how risky that can be.
So I don't want to get too technical and confuse everyone, because the way that decentralized exchanges work, it's a bit technical, but I'll just I'll slightly touch upon it, because you guys have to understand a little bit to understand what like a rug pull or a liquidity pool is. So on centralized exchanges, the way that people can buy and sell is because the exchange itself provides that asset. So let's say Sahid and I wanted to buy Bitcoin, and he has the dollar. Now we can trade. I'm sorry, I'll get to that question in a second. So we can trade directly on peer-to-peer services, but when you're dealing with an exchange, it's a for-profit company, and they're the ones forking up the asset in order for people to be able to trade. So they provide something known as liquidity, which it's essentially secures the fact that you're going to always be able to buy something and you're always going to be able to sell something. So an exchange with really good liquidity, a high amount of liquidity, means that the exchange holds a lot of the assets that you're buying and selling, and it makes it a lot easier or like a lot quicker to be able to buy and sell. So if you have $100 million of an asset compared to $100 of an asset, you're going to run out of one a lot easier than the other. And so again, a centralized exchange, they're the ones providing those assets. On a decentralized exchange, the people, because again, no single person controls it, the people themselves are the ones providing that liquidity. So any like Joe can take their crypto and provide the liquidity so that it can be traded. And without going too much into it, there's also a way for you to make passive income like doing that. If you were to take like some Ethereum and some US digital dollar and put it onto a decentralized exchange so that people can trade with your cryptocurrency, there is a way for you to earn some interest on that. There's a way for you to make a lot of money off of that. We're not going to get into that today. That's something that we're going to leave into the future because it's a bit more complicated. So people are the ones who provide the liquidity in these decentralized exchanges. Liquidity pools is essentially a kind of scam where somebody removes all of that liquidity. So one of the most common scams in crypto involves rug pulls and liquidity pools. A rug pull is essentially just the cryptocurrency who hypes themselves up, gets a lot of people trying to buy it. They inflate the price, it gets pumped, and because they hold a significant amount of the supply, what they'll do is they will sell it, and which the way that the centralized exchanges work, it's kind of an algorithm that tries to figure out the price. And when there's a ton of selling pressure, it will automatically reduce the price bit by bit. And if it happens in such a short amount of time, it causes the price to tank. So this happened earlier this week with a cryptocurrency, which basically caused it to go from $64 to $0 in all but 2 hours. So if you were in front of your computer and you had $100,000, within the matter of 2 hours, you would have nothing, zero. And then what they do is they also pull the liquidity so that it's a lot harder for people to exchange, and that also causes the price to go down significantly. And this is just an exit scam. So that's one of the risks that can happen. It's just essentially, I create a cryptocurrency, I pump it, and I just cause the price to crash. That's why people get really lost into a lot of these things. Hacks can also happen where an exchange, the code on one of these can get hacked, and then they can just steal the money. This can happen on centralized exchanges too, and it's happened before. I think one of the biggest hacks that ever happened in cryptocurrency was back in the day, about $400 million of Bitcoin was hacked and stolen from an exchange. Nowadays, exchanges, they pour a lot of money into their cybersecurity to try to prevent these hacks. But like I said, the thing about decentralized exchanges is you can hold your money in your own wallet. If you hold it on a centralized exchange, like, you can get your money stolen like it did back in the day when $500 million of Bitcoin was stolen. And then if the company doesn't have the money to pay you back, you're fucked. So that's one of the biggest risks with centralized exchanges. And then you have the incredible amount of scams that can happen on decentralized exchange. So it is a risky bit. It's all risk in crypto. You just have to know how to manage your risk and know what you're getting into, making sure you're not putting your money into a scam. I'm sure a lot of you people have heard about SafeMoon. I personally think that's a scam. I don't want to get too deep into that, but it looks like a scam. It smells like a scam. If the shoe fits. If you have anything to add, Sahid, or if anybody has any questions, we can take some.
I mean, in terms of the risk, there's obviously ways for us to protect ourselves and protect our investments. And that's why we're going to get into like wallets and wallet types. So here we have, for example, hot software wallets and then cold hardware wallets. So the difference between the two, with the hot software wallets, you're connected to the internet. It's more user friendly. It's a little less secure, and it's for small day-to-day transactions. And then cold and hardware wallets, they're not connected to the internet. They're a little bit harder to use, and they're obviously way more secure. And it's essentially for long-term holds. So that's where you would store your money and keep it for a long-term hold. And this is the way we're going to protect ourselves and essentially protect our investment. Because like we mentioned earlier, with the exchanges, if they're centralized, and even with the decentralized exchanges, there's risks with things happening and you having your money on the exchanges. And like my go-to, I personally, since I'm a long-term holder, I have a ledger, right? Which I'm still learning as the day goes by, as far as the whole transaction. So when people want to get their hardware wallets, I mean, I would advise a ledger, and then I can help you guys in terms of setting it up and doing the transactions from the exchanges to the ledger, because it could get a little complicated, and there is risks involved in it too once you're transferring your money from an exchange into the wallet, because if it's not run through the proper address blockchain, you could lose your money. So those are things we'll cover later on, because it's a little bit of more advanced things. And these are the different options that me and Alejandro would suggest in terms of the hot and software wallets: MetaMask, Trust Wallet, and Exodus. And then the cold hardware wallets is like the Ledger and the Trezor. So it all boils down to essentially, your purpose and what you really want to do, and how you want to go about it. But this is essentially how you're going to be protecting yourself and your assets once you buy cryptos. You should not be parking your money on an exchange, especially with what's going on with all this craziness and the government being involved now. They can easily just put a regulation down, and then now your assets are being frozen in an exchange without you being able to liquidate it. If they're on a wallet, now you're able to handle it and transfer it into other places where you can liquidate it. And also, we're gonna Caesar had a question here, and his question was, let me go into the chat here. Your question, can you say your question in terms of what you were asking in the chat?
You want me to read it to you? Or?
Yeah, you can read it.
Well, he asks, how will transfers work without internet? Can transfers work between two cold wallets and then later get verified once both cold wallets sync to the internet? So I mean, yeah, it's possible to do that. It's a little more complicated, but you can essentially, you don't need to have internet to make a transaction. The transaction won't be sent because you have to broadcast it to the network, because the network works on the internet. So if you don't connect to the internet, your transaction won't be sent because the network won't know what you're doing. There's no connection. But you can make a transaction, get it set up. You can say, okay, I'm going to send this amount, let's say Bitcoin. I'm going to send 1 Bitcoin to this address, and you can sign you can make the transaction, you can confirm and sign the transaction, and then you can connect to the internet and you can broadcast that transaction to the network so that it can be confirmed by all the computers in the entire network. It can get sent through. Typically, yeah, you would want to do that if you're trying to be as secure as possible. If you have a cold wallet, you can use your cold wallet to sign the transaction, send it to a hot wallet, and then you can broadcast it to the network in that way. Yeah, but hardware wallets like the Ledger or the Trezor, they make it significantly more secure and a lot easier to not have to do that. So you don't really have to go through that extra layer of security, because these little devices they have heavy encryption, so it's incredibly secure. They're a lot easier to use. Well, than doing that. And they're pretty user friendly. A lot of them. They're a little more difficult to use than the software wallets, but they are they're pretty user friendly as the technology has been progressing. I'll go ahead
Stella had a question.
yeah. If you want to go ahead and ask your question, Stella, and we'll get to Santiago in a second. Stella, do you still have your question? You can go ahead and unmute yourself to ask.
Oh, hey guys, can you hear me?
Yeah. Hi.
Okay, sorry about that. I had to go to a different room. My question was, why would you need, well, I have MetaMask and I have a Ledger Nano. So why would you need both? Why would you need to connect your Ledger to MetaMask? Is it for double authentication or
It would really just be for that like extra security, because you can have your own wallet on MetaMask. MetaMask allows you to create your own wallet. And for the people who don't really know too much about wallets, when you create a wallet, it gives you a private key and what's called a public key, and it's very simple. Just think about your wallet as like this safe, this little mini safe, and it has a little slot where people can put money into it, and it also has a keyhole. Your private key, when you're creating a wallet, is the string of words where it gives you access to the safe. So that becomes the key itself that opens the safe. That's your private key. And then the little slot where you can just pour money into is called the public key, and that you can share with anyone. That's how people send money to you. It's like getting the Cash App code or using your phone number with Zelle or Cash App for people to send you money. That's essentially your public key. The private key, you do not want to sell. You do not want to share that with anyone at all. It's like giving a random stranger the key to your house. And you also, you have all your money in a safe. You don't want to give anybody the key to that safe. So in MetaMask, you create the wallet, right? And it can create your wallet like that. And you can have a wallet through MetaMask. With Ledger, it holds and secures your private keys so that you don't need to enter them anywhere. In MetaMask, it's connected to the internet. So if you enter your private keys, malware that can get into your computer, it can key log you, which means it knows all the keys that you're entering. And if it can figure out your private key, if somehow malware got into your computer, then you're going to get your money stolen. So that's really the security of hardware wallets, because it comes with the private keys already like installed. When you get it, you can write down your private keys on a piece of paper. That's the absolute safest way to store them. Always write your private keys down and store them somewhere safe. A lot of people, they store them in like fireproof containers. So that's your Ledger. So it holds your private keys. So you don't have to enter them on MetaMask, and you don't run the risk of something bad happening. So that's the reason that you would use a Ledger with MetaMask or Trust Wallet or any other applications that are compatible with the Ledger, so that you can sign the transactions, allow the money to be taken out of your account and be sent over. And that's really just for security. That's the reason you'd need to use a.
For example, when you want to interact with
Jason, can you mute yourself?
Jesus Christ. Also in with MetaMask, for example, the difference between the MetaMask and the Ledger is that when you want to interact with the decentralized applications, you're going to need a MetaMask to do so. You really can't do it with the Ledger, because the Ledger can't really connect to those decentralized applications. And that's why essentially, like, for example, MetaMask, you get it on your browser, and when you go into, Uniswap or whatever, you'll connect through the MetaMask. It's it's more difficult to do it with the Ledger, and I don't even think you can. So then does that answer your question? And then we'll go to Santiago, because I know he had a question as well.
Yeah, it did answer it. Thank you.
You're welcome. And Santiago, you have a question?
Yes, thank you guys. Can you guys hear me?
Yeah,
we can hear you.
Beautiful. Thank you. Well, this is a great segue. Thank you, Stella, for asking that question because it's actually a great segue into it. It's a two-part question. First one is talking about the ledger. I know from what I've read, literally 5 minutes ago, I just finished buying my ledger. And I was reading, and it seems that you can actually also buy at least some coins through the ledger. So I want to know if that basically makes ledger also an exchange. That's more of a curiosity question. But the second question is exactly about MetaMask as well. So Sahid just said you can have your coins on the ledger and link the ledger to MetaMask, and then through MetaMask have the ability to interact with decentralized applications. So are you able to move your coins, or trying to figure this out, are you able to manage your coins through MetaMask in decentralized applications while they're still safe in your cold wallet, and be reassured of that?
Sahid?
So I'll answer the first questions in terms of the ledger and the ability to buy on the ledgers. So I wouldn't necessarily consider like ledger an exchange. I mean, you can buy, but I did notice that the price is a little bit more elevated on the ledger than it would be on like a regular exchange like Coinbase or Crypto.com. So you do want to compare. If you want to just buy straight through the ledger, you want to compare what price you're getting it at, because it'll usually be a little bit more expensive. And then I guess Alejandro can help out here with the second questions in terms of the interaction with the MetaMask and the decentralized applications.
So with Ledger, so it's a little more complicated with the Ledger to connect to decentralized exchanges, because that functionality just came recently. There's something called Wallet Connect. It's basically a way for you to be able to have access to a wallet without needing to put your private keys anywhere. So let's say you have a wallet like on your Ledger Live. The way it kind of works is like you scan the code, a QR code from that wallet, and it allows you to then on your phone or wherever you're using it, allows you to connect to that wallet in a special way. I don't fully understand how that works. And then you're able to connect to decentralized applications. So I don't use Wallet Connect. I also don't use my Ledger Live, my Ledger to connect to decentralized applications. I have hot wallets that I use for that, because it's just easier. You can also use them on your phone. If you have Trust Wallet on Android, it has a decentralized application browser, so you can interact with them in a very seamless and easy way. They took away the functionality for iOS devices, unfortunately, because Apple has some serious restrictions when it comes to applications. The other alternative for iOS is a MetaMask or Engine Wallet. Let me go ahead and type that in the chat so you guys can. So that's how you spell it. Engine Wallet is also another good wallet for decentralized applications. Just with Ledger, I don't have too much experience with that because I just generally don't use it. I find it a lot easier to just send it to a hot wallet that I have, use it for whatever I need, and then send it back to my Ledger. The Ledger for me personally is really just used as cold storage. It's like where I just consider it like a savings account. It's where I put my money, where I'm not going to touch it for several years. I know it's parked somewhere very, very safe. So even if I leave it there for 10, 20 years, I know that it's safe as long as I have my private keys. I'll always be able to access it. So interacting with decentralized applications, I just recommend using a hot wallet. Maybe, if you're going to be sending large amounts of money transactions, you just have to make sure that you double, triple, quadruple check that you're sending it to the right address. if you're going to be using that on your browser, MetaMask is the go-to on your computer. If you're using mobile, again, MetaMask or Trust Wallet, they're really good applications for you to interact with decentralized applications. And Engine as well is a really good one. And just I'm gonna add a little bit, just one more thing. Like Sahid said about buying on Ledger. Yeah, it's typically more expensive if you're not on an exchange. So these applications do have partners. Like you can buy crypto, I think, from Exodus Wallet. You can buy through Trust Wallet. I think you can buy some on Engine Wallet. I haven't used it in a while. But typically the fees are significantly higher because they're partnered with it's a third-party partner, and you're routing the transaction through them instead of dealing with the exchange itself directly. So typically the fees are significantly higher. They can be 1%, 2%. They can go as high as 5%, which is honestly, it's absolutely insane to me. So if you're buying cryptos, I just recommend using an exchange. On Coinbase, you can go on KuCoin. It's something that we had up on the slide earlier. I'm gonna go ahead and type it in so you guys can see it. KuCoin is one of the best exchanges to use because it has way more tokens available than Coinbase or maybe crypto.com. You can get into so many new different investments by using KuCoin. It's very legit. They have an app you can download and use it. And yeah, I hope that answers your question.
Yeah, it does. Just a quick follow-up, because you said something that made me realize with hot wallets and the apps that we use on our phone. I know they're exchanges. I know they're still trusted wallets and all these things, but again, phones now are something that we use for even going into Facebook and clicking on weird links that people send us and all that stuff. Are these wallets? Are we to trust our phones? I'll trust the wallet itself, like Trust Wallet and Exodus. But can I trust is there any malware in my phone at any point that could risk my transactions or my coins when I'm dealing with them?
Yeah, I mean, there's always that risk if you're on mobile or if you're on your desktop computer or laptop. You always run the risk of malware affecting your apps in any kind of way. Like I talked about the keylogger that can track what keys you're typing in, so it knows what you're typing in, what words you're typing in, so it knows your passwords and stuff. If you open up links to sketchy places, they can. I mean, I've heard about people getting robbed because robbers have found them through their IP address. But that's just people being careless, holding hundreds of thousands of dollars and showing it off. So you always run that risk of software wallets. Does it happen often where something like that is going to happen? No. I mean, I've been in crypto for years now. I've never had an issue. Hacks can always happen. The possibility of you getting hacked, your phone or your PC, is pretty low, but it's not zero. An interesting thing that I'm going to add is that Samsung actually made a hardware wallet directly ingrained into the Samsung Galaxy S10, and a little beyond. Some of the newer phones, I don't think they have it, but they have special encryption technology that you can use it as a hardware wallet, and it's encrypted in a way to keep it secure. So if anybody has that phone, it's in your wallet. You can just look it up. It's called the Samsung Blockchain Key Store. But yeah, there's always a risk. It's not zero, but it's not incredibly significant. Yeah.
Thanks a lot, guys.
I do want to add, Santiago, that we do want to be very, very careful. And this goes for everyone. Once you get into crypto and you start following different websites on Instagram, and you're more engaged with all these different things, you will have, and this is talking from experience, you will have people DMing you on Instagram about these different coins. There will be emails that you will receive with links. Be very careful with that. I know firsthand of someone that a couple of years ago, they were into crypto and they got links and they followed it and they essentially did get hacked. So you just want to make sure that your attitude is, you know what, I'm investing into this and everyone in the world is out here to get it from me. So I just have to be very, very, very careful. So just be very aware with links, with people DMing you about projects and giving you links to go check it out. We just want to be very careful. And in terms of the wallets, I have both MetaMask and Trust Wallet. And MetaMask, it could get a little complicated. Trust Wallet, I like it because when you go to add certain coins and tokens, it also says kind of where it belongs. So you'll have, for example, I'm trying to think of one, like for example, I don't know, Polygon. It runs on Ethereum. It runs on Binance Smart Chain. If I mean, I'm just, for example, there will be tokens and coins that run on multiple, and on Trust Wallet, it will show that. So I think Trust Wallet is good because you can see kind of like where it's the proper, like where would be the proper way to send it. Because when you go to send and, it's like you could only send an ERC20 token, you want to make sure that that token does in fact belong in the ERC20 ecosystem, because if it doesn't, then you can lose it. And for example, USDT, right? That stable coin, it can interact with multiple blockchains across, so you could send from Ethereum's like blockchain to Binance Smart Chain. So that's something also that I pay very close attention in terms of, I always look up, and just verify that the token or coin that you're sending is compatible with where you're sending it to, because that's a risk that you run in terms of sending it through the wrong thing and losing it. Also, Alejandro, you want to add something?
I was just gonna make a personal recommendation to anybody who doesn't understand wallets too much, very, 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 very new to crypto. Exodus wallet. I'll go ahead and type that in here. That's the little the wallet you see on the bottom on left, the little X. Exodus wallet is incredibly user friendly, especially to people who are new to cryptocurrency. It's incredibly easy to use. It's very beautiful to look at. If you're looking for your first wallet, Exodus I think is the way to go. You're muted.
All right, am I back? Can you guys hear me? Hold on.
We good, Saeed? You're I think we lost you.
Can you hear me?
Yeah, I can hear you. Okay.
Okay, yeah, no, it's because since I'm on the phone and I'm on the computer, you unmuted the one on the computer and it's got to be the one on the phone. So like I was saying, so in terms of the security and where you're going to be storing your cryptos, you're going to have these wallets. And like we spoke about it already in terms of how important it is to make sure that you store the keys in the proper place, that you make sure that you're very careful, because this can happen to you. And here I put an example. Don't be this guy. So this guy here owns $321 million in Bitcoin, but he can't access it because he lost his password. So when you go to create your wallets or when you have your ledger, just make sure that those keys are very, very well kept, that you put it somewhere safely. Because if you don't have, that's going to be, so that's the catch, right? You have control of your assets, you have control of your cryptos. So you have one task and one responsibility, and that's to make sure you store your keys properly and you don't lose them. And that's something that I'm personally very, very careful with. So we're going to move on to this next slide. And this is very important because this is where you're going to shift away from listening to what your friend has to say or what the news has to say. And I'm going to pull up these different websites and different resources that I use. So if this didn't sink in at all, this is definitely something that you want to use to go and do your own research and your own due diligence. And I'm going to use an example. So I'm going to exit out of here, and I'm going to go into my. So can you guys see my screen?
Yes.
So here we have CoinMarketCap, right? Here you go in and you see more or less, the different cryptocurrencies, their price, their 24-hour percentage change, their 7-day, and just all these little great things that you can use to do your own due diligence. So let's go into Algorand, since it's my favorite. So here we go into Algorand, right? We got the price. We have an overview. We have, different things you go into. And one thing that I always emphasize to everybody that's, beginning to invest, and they're really looking to put something where they could really get a good return. I always tell them to focus and look at the market cap, right? So for example, Algorand, right? Algorand is at $2.78 billion market cap. So let's just say, for example, you have someone like Elon Musk or Jeff Bezos and be like, you know what, this project is very promising. I'm going to invest $15 billion. This is going to go from 2.78 billion to 17 point whatever billion. So the price is going to move significantly. Now, if we go and we look at Cardano, for example, which I'm invested, great project, but look at this. Cardano has a market cap of $44 billion. So for Cardano to move, insanely in price, that means that this market cap is going to have to move a lot. And this is why the misconception, and people are like, you know what, Shiba Inu, we're going to the moon, we're going to $1. So for Shiba Inu to go to $1, the market cap has to literally be in the 5-10 trillions of dollars, right? So right now our market cap overall is $1.47 trillion. So when people come and say, Shiba Inu, we're going to the moon, we're going to go to $1, that's going to require the market cap to go into trillions of dollars. So that's something that you guys want to take into account. So we also have CoinGecko, which is also another resource that we can use to go into these projects, to do our due diligence, to see, for example, what these projects are made up for. They give us a little rundown. Okay, what is Chainlink? They give us a video, the brief history, the team behind Chainlink. What is the purpose? So these are all things that we want to take a look at before we invest and we park our money into any project. Don't go, oh, Kadoji, Shiba Inu. This is very important because this is what's going to give you the right decision on whether you're going to invest your money into the right thing or not. And one thing that I love about Alejandro is he's always focused on, okay, what problem is this project solving, right? What problem is it solving? And I like also Masari. This is one of my favorite ones. Gives me the price, gives me a little, chart analysis. Obviously, for those that are, day traders and go more into it, we use TradingView. So this is another one that I like to use. And then in terms of news, I go to CoinDesk and I see all the news, right? All the news that are happening, what's going on. For example, you go to Bitcoin, you can see, news focused on Bitcoin. So we have different articles here, just something to go, buy and do your own due diligence research. And then we got Crypto Panic. This could be a little overwhelming, but is essentially also just, what's going on. So Crypto with Friends, Crypto Market Update. This would be another nudge for Bitcoin miners and all these things. So you go in here, you click and you get more information, more research. You actually get to, and then another thing that I like to use is I like to go into the Twitter and the website and the Twitters of these projects and the people that make it up. So for example, you guys are gonna get tired of me talking about Algorand, but Algorand is my favorite. And here we have their Twitter. We see what they have going on. We're getting updated on what they're doing. We go to, the creator. So here's the guy that created Algorand. We go here, we go to see what he has going on, and boom, we come across things like this. So this is the mayor of Miami, okay? And we see here, Borderless Miami, Algorand. So we see what's going on, what's happening, and it's important because sometimes somebody tells you about a project in a crypto, and you go and try to do your own due diligence and research, and you go into a Twitter account that hasn't been active in a year and a half or two. So what does that really say about the project? And I want to show you guys this. And the reason why I talk about Algorand a lot too is because I'm going to have something special for you guys that stayed on here. So let's go and check this out. So look at the ecosystem overview of Algorand. This is the technical, right? So this is all of the technical companies, partners that they're dealing with. We have the financial infrastructure, right, where we can go and buy the exchanges, the wallets that they work with. So we see that they have Ledger here, the stable coins that they work with, ecosystem applications. Look at all this. University partners, right? So they have university partners, the key stakeholders, and then I like to go in and to see who, like who runs this, who's what's the team, right? Who's in charge of what's going on? And we see all these, different phases, and we can do our own due diligence and looking into these people. I don't know, let's look this guy up. So it tells you a little bit about him and gives you a little rundown. Silvio, obviously the guy that created it, super smart guy. This guy is a freaking MIT professor. This is the type of things that I encourage people to do, right? Do your own due diligence, go into their Twitter accounts, check it out, see what they're doing, see what they have going on. And that is going to be the key difference into you investing into the right shit and into the wrong shit. Because somebody comes and tells you, yo, Doge, my God, it just went up 10 cents. You should invest in it. And people don't do their due diligence and their research. They go invest in Doge. And they're like, you know what? I'm going to hold Doge for 3 years. They hold Doge for 3 years. And then 3 years it disappears because there was no use case for Doge and it disappears. So this is stuff that I encourage is very, very, very important. Please do it. Do your own research. Don't go by what the hell people have to say. And now we're gonna take some questions and we'll answer them. I know this could be very overwhelming for those that are starting off. It's a huge learning curve. I'm still learning. I don't have it down packed. I'm not no expert. There's no such thing as being an expert in this because it's growing as the days go by. More things are coming out. For example, like staking. Staking is something that came around in the last year. It hasn't been around. When those that were investing into crypto 3 years ago, there was no such thing as staking. So there's so much going on. And, essentially the chat that I created is for all of us to help one another answer questions. There's no such thing as a stupid question when it comes to crypto at all whatsoever. It's good and it's best to get that reassurance in the terms of the things that we don't understand. And especially when you go into the, investing and then transferring and then going into the wallet, that's something that you're going to need guidance and help with, regardless if you think you know it or not. And that's why that's essentially the purpose of this freaking group, is to everybody help one another. And those that are starting off get the right information, because that is key. That is very important. Getting the right information. People come into this space, they get into the wrong shit, they go invest into stupid gambling, they lose their money, and then guess what? They walk away from the crypto space and they think that it's a scam, that it's not going to work out. And like I said, this is something that's here to stay, that is going to get, that you're going to use regardless. So right now, you may not be for it, you may not understand it, but it's going to be something that regardless you're going to use and you're going to have to understand. So any questions, we're here to answer. I don't have any plans. So if anybody wants any, answers on anything that they got stuck on, that's what we're here.
Yep. You guys have any questions about it? Maybe any cryptos you're invested in them? You guys can go ahead and ask. I know about a lot of this for different cryptos. If you guys are curious about anything.
What do you think about Pi?
Pi. I think Sahid knows a little bit more about that than I do.
Sebastian was the one that kind of like put it in the chat. And I mean, I hopped on board to see what they have going on, but I haven't dove into really what it is. So if Sebastian's still on here, I mean, he could give us the rundown on what it is.
Well, I mean, there's just surface level. What the only thing that I can say about Pi is that it's crypto mine. It's basically crypto mining on your phone, right? I don't know too much about it. When it comes to crypto mining on your phone, that's that kind of stuff I don't pay too much attention to, because I mean, in the past it hasn't really worked too well. But again, the space evolves, it changes, it gets better. But it's just not something that I'm personally like looking into too much as far as Pi goes.
What about that Bobcat mining? The helium.
Helium. Oh, right, helium. So, like, crypto always evolves and it changes. Classically, the way that you would mine is you use your computer. You have to have good components in your computer to be able to mine Bitcoin or Ethereum. Helium is an interesting one. So what they're essentially doing is they want to build a hotspot network, a global hotspot network. So you buy yourself like this little, router looking thing. It's a helium miner. It's this router looking thing. You plug it into your wall, and you stick it somewhere nice because it has a little antenna so that it can connect and broadcast its hotspot network. You connect it to your own internet, and the way you get paid is confirming that that little hotspot can connect to other hotspots, and then those hotspots can connect back to yours. So they're just kind of confirming that your little antenna is giving good signal out, and it's able to actually do something for the network. And it's really, you can think of it almost as like a charity thing. The grand majority of cryptocurrency projects, the biggest ones are nonprofits. Like the Ethereum Foundation, the people who created Ethereum, they're nonprofit. The people who created Cardano are nonprofit. So it's a lot about crypto. Again, it's all about the people. So this helium thing, they want to expand this hotspot network for anybody to be able to connect. And so we're moving towards like an age of Internet of Things, where all little devices are going to be using the internet. It's going to be important to have. Right now, I have seen people making some crazy figures. These helium miners, they cost anywhere between like $200 to $500, and you can potentially make that money back within a month. Sometimes you can make more than $1,000. I've seen some people within the last year since it started making $100,000, $200,000. I've seen some people make way crazier returns, and it depends on how many miners you have. You can't have them too close together. You do have to spread them out. But yeah, that's what helium is. Any other questions that you guys have? So
we have Jorge has a question.
Yep.
Yeah. How do you deal with taxes when you're you're into this and you have to deal with the government?
All right, I gotta put this out there. I'm in no way, shape, or form a tax professional. So take this with a grain of salt. As far as I know, right now, there isn't any solid legislation when it comes to taxes. I know some people that they don't really keep a log of their taxes. People who trade stocks, they trade stocks, they have to keep a log of every single transaction to be able to prove how they made their money, and then they have to turn that in. When it comes to crypto, generally that's what you're supposed to do, but because the laws are so loose, I have heard of people just saying, I invested 10,000, I made 40, so I'm gonna pay whatever the marginal tax rate on that is. I can't speak too much on that, on what you should do.
I guess I'll share something. I was part of a live earlier this week. I don't know if you guys saw my Instagram. So I'm part of an inner circle group, and they had a tax guy come in and do a live. I am not supposed to share this with you guys because obviously it was for the inner circle members only, but I'm going to share it with the group. I'm going to forward this to you guys. And I think it can answer a lot of the questions that you guys have in terms of the taxes. So I just shared it in the group. Go into it. I'm sure you guys can have access to it and watch that. And he breaks it down. Just make sure you don't go spreading it and sharing it with everyone. You didn't get it from me. You didn't get it from me.
Yeah. Well,
I'm telling everybody I got it from you, Zahid.
It had to be you, bro. It had to be you.
You know how I am, bro. I'm messing with you.
But just bottom line about the taxes. If you're day trading crypto, it's just considered income. So, if you just tack that onto whatever income you make from your regular day job, it's just considered income. If you're holding your crypto for more than a year, it's considered that's just long-term capital gains. So you pay a significantly lower tax rate on that. And then when in short-term gains, because it's your income, it just depends on what tax bracket you're in. So you just have to look up what tax brackets you're in, and if you're in it for the long run, you don't have to worry about it. You're just going to pay significantly lower taxes than if you're day trading or if you're trading within less than a year. If you hold more than a year, then you get that incentive to hold for longer. You get taxed less.
And move to El Salvador. That's the way I'm gonna do it.
Salvador. Yeah, I'm sure you guys have heard the news. They just made Bitcoin legal tender over there, so no taxes over there. Puerto Rico too. I might go over there.
Guys, can I ask a quick question about that?
Yeah, what's up? You have a question?
Yeah, about the El Salvador thing. So I've read the news, but just putting it on a very practical level, how does it mechanistically, how does it work for El Salvador to make this legal tender? Are we saying that now the currency is going to be Bitcoin, so everybody will literally have their own wallets and literally go to the store and exchange fractional Bitcoins to buy eggs and milk? Is that basically how I understand it?
So I guess I can just answer a bit based on a picture that I saw. So I saw a picture of a QR code that was posted outside of a store. So essentially it's going to be, usable, and you're going to be using it in the real world. And we're going to have Bitcoin in our wallet, right? And just how you transfer from the exchange to the wallet using that address, you're going to be able to go to the store and you're going to be able to shop, and whatever your bill is, now you're going to be able to send them that exact amount in Bitcoin. And it's literally, you scan the QR code, and that's the address you're sending the money to, and boom, you send it, and it's instantly. Now it becomes a little bit like, these fees are going to become a little problematic. So I'm not sure how they're going to be handling that. But I guess that's going to be the real key, the real use, the real, in terms of how they're going to do it over there and how they're going to use it. And I'm sure the banks or they're going to provide Bitcoin in exchange for money to then, be able to go and use it. Does that answer your question?
I do know a little bit more. I haven't been going too deep into it because I don't live in El Salvador, but what the government is looking for is like for businesses and stuff to be able to provide a way for people to be able to transact in Bitcoin. So there's like a kind of deadline for people to try to figure that out. As far as I've read, again, I don't know too much in detail about that, but it'd have to be like the banks would have to hold reserves. I know that the government itself plans on mining Bitcoin through volcanic thermal energy, which just sounds cool. Using volcanoes to mine Bitcoin. They're gonna be generating their own Bitcoin too. And using it, it's just like Sahib said, using a wallet, going around. In Venezuela, That's how they're doing it because they're not using Bolivar anymore because it's worthless. Cryptocurrency is thriving over there. They're using Bitcoin. They're using other cryptocurrencies like Dash, and it's just up to the businesses themselves to provide the service to be able to use it. Really, and if they have that service available, then you're gonna be able to use it. But it works. I mean, it's kind of working in Venezuela right now. El Salvador. It's very complicated, and I don't have all the answers to that, but that's essentially how that goes.
I know. I'm just curious because I'm glad you mentioned market cap, because right now we have what, like 2 more million bitcoins to be produced. The rest is actually in circulation. So I guess that's my question. Like, I mean, well, they'll El Salvador just try to buy as much Bitcoin as they can so they can do some sort of a one-to-one exchange from, I don't know, El Salvador currency to Satoshis, basically, because they cannot go on fractional Bitcoin.
Right.
And then, or are they going to generate the whole thing? Because I mean, that's the beauty of Bitcoin. It's limited,
Right.
and it's theirs. So I guess that's one of the things I'm still trying to grasp on terms of that exchange to suddenly take a whole
Right.
country's monetary system into a different exchange. Not to mention the hopefully more countries continue to do that. So I don't know. I guess I'm just trying to figure all that out. But you guys have very good guidance on that. That was those answers were actually very helpful.
You know what? Since you did mention that, I'll just add a little bit. So Bitcoin just became legal tender over there. It means that people can just transact with it. It doesn't mean necessarily it's going to become the national currency. Because there's a lot of there's a lot of countries that use the dollar as legal tender. Like you can go to a store and you can pay for the dollar somewhere in South America. If I'm not mistaken, El Salvador they use dollars. So in going back to like the how it says that you said Bitcoin is limited, and going back to the transaction fees, realistically, Bitcoin doesn't really work as a currency. I mean, if you've heard about people talking about Bitcoin, people have stopped referring to Bitcoin as a currency a long time ago. They refer to it now as a store of value because if you buy Bitcoin, it's going to go up. They refer to it as digital gold. And what do you do with gold? You don't see people going to the store with their brick, buying their Starbucks.
Yeah, you store it.
Exactly, they hold on to it. So it's really just like a move. It's a big move to show that they're trying to push something more. I don't know like their reasoning behind it. I just don't see it being used as an actual currency. It's going to be definitely as a store of wealth, and that's really what.
No, I think you nailed it. I think it's exactly like that difference that I hadn't really seen in my head. It's legal tender, it's not the currency itself. Thank you. I think that actually clarifies it, man.
Yeah, cool. If anybody has any other questions, again, we're no lifers, so we have plenty of time. And if you guys have any questions about like any of the cryptos, again, I know about plenty of cryptocurrencies and things that you might be looking at.
I kind of have a question. How will cryptocurrencies replace credit and like credit and like bankruptcies and the whole like credit system in itself? That's kind of like right now, a person can file for bankruptcy if they can't afford to pay all their credit. Will it eventually wipe out the credit system, or how will that work?
So honestly, I don't see the credit system going anywhere.
I can I guess give an opinion more or less.
You're a resident financial not advisor, but you're not an advisor.
you have to take into account that's gonna essentially like it can possibly disappear, but in very, very long time from now, because essentially, so for example, cryptocurrency has taught us to save, right? Like last year, for example, the pandemic, everybody lives off of credit cards, this and that. There's no savings that people really have, and now cryptocurrencies is essentially kind of a savings, right? Because you're buying and you're storing and you're saving. You have to own it to be able to use it. Now, when you go into, for example, these BlockFi where you're getting loans of crypto, you're essentially given a collateral, which is, you know, the cryptos that you already like what you already hold. So in terms of like the credit system and how that would be affected, I see it as, you know, the cryptos that you own and have, you're going to own and have, and you know, you're not really living off of credit anymore. You're just living off of what you own. And I personally feel that's why crypto's very key and very important, because it's going to give a complete shift from people just being okay with living off credit, having credit card, using it, and then deciding to pay it off whenever they want to essentially, you know, you're only going to be able to use and spend what you own. And then you want to risk what you own in terms of getting a loan like the BlockFi and using your, you know, cryptos as collateral, then you're just going to be losing what you already own. So in terms of it, you know, like completely wiping it off, that's going to be a very, very long time from now. I don't know if that answers your question. And I mean, Alejandro can add if he has anything else to say. Guess I hit it on the spot. Alejandro, you're muted.
You hit it on this. You hit the nail on the head. Yeah, I mean, yeah, that's. I don't really have much to add to that. I see that Otis has a question on Aave. Can you pull up DeFi Pulse so we can take a look at
Do you want me to just stop sharing and then you share?
No, you go ahead. Go ahead. Because I don't have my desktop ready for that. So this is DeFi Pulse. A lot of people don't know about what decentralized finance is. I'll just give you the elevator pitch. You can get loans. You can get loans without going to the bank because it's peer lending. You can earn passive income by doing something called staking. You can make 10%, 20% on riskier assets. You can get 100, 200, 300% yearly interest on some cryptocurrencies. It's decentralized finance. It's you don't have to go through, you know, traditional financial systems to be able to grow your wealth. And DeFi Pulse here basically tells you about how big the space is right now. If you want to scroll up a little bit, you'll see on the left in that. Oh, you're on DeFi lending. Can you go to the homepage actually? Because I want to make a point on that. So if you guys look at that little purple thing, I'm sorry, the purple text where it says total value locked, it says 52.69. I'm sorry, 52.9 billion. $52.9 billion is how much money there currently is in decentralized finance. It means total value locked is how much money is locked into decentralized finance. And if you look at where we are now, it's at 52.9 billion. Not too long ago, we were at 86 billion. And that's at the height of like where the market was. Recently, we had a crash, so there's been less interest. And since you have a question about Aave, Otis, you can see right there, Aave dominance is 15.97%. You want to scroll down a little bit. You can look where it is on this chart. Aave currently is the top DeFi platform. So my thoughts on Aave is that it's number one. That's really all you have to look at. As far as where you have to buy it, I don't know. I don't own any Aave myself.
I got some. I get it on Coinbase. You get it on Coinbase.
Okay. I think it'll be available on KuCoin as well. Again, I recommended KuCoin to you guys. And KuCoin is an excellent place to buy cryptocurrencies. again, they offer an incredible amount of cryptocurrency. But yeah, I guess if you can buy it on Coinbase, that's where you get it. Aave is the titan right now in decentralized finance. Even if it isn't number one in the next year or two, it's gonna be top 3 or top 5, which means it's gonna just keep going up. It's Aave is a beast right now, and if you guys want to invest in any others, um, you can go on DeFi Pulse and you can take a look at some of these other platforms where you can invest your money. So yeah, those are my thoughts on Aave. It's I don't know again too much about Aave as well, but it is an absolute titan right now in crypto.
I also want to add that obviously DeFi is going to it's even going to I personally think it's going to be even bigger than just like crypto overall, because DeFi is essentially going to give people the complete power to be their own bank and to lend out their money. Parking your money on Chase Savings getting 0.0001, that's not going to get you anywhere. And decentralized finance, DeFi, it's you're going to be able to own certain cryptos that you can go and lend out and park and just earn passive income on it. So it's definitely a game changer. And this I'm going to show you guys this website too. We'll get into staking later on, but I like going into staking rewards and seeing, for example, the top assets. Like you see Algorand number 6 and staking, total staking 51.89%. So half of Algorand right now is staked. And this is essentially a way to, earn passive income. And we can have a whole nother session on just staking, how to do it, where to go. And I know there's so many questions revolving it because since it's so new. And this is what I talk about and tell you guys, that it's so much more than just Bitcoin, Ethereum, and just buying cryptocurrencies. Like there's such other routes and avenues that we can go down on, that we're going to be able to make money with what we already own. So just taking that shift of having your money in a savings account to purchasing Algorand and then going and staking it, and now you're just earning rewards. It's like, I think it's going to be very life-changing for a lot of people if they really adopt this and they take this very seriously and they understand the value and the potential shift. One thing that I always keep in head is there's going to be literally a transfer of wealth, because we're going to have eventually Warren Buffett's, not going to be here, and his fortune's going to be passed down, and guess who's, his grandkids are going to have it, and they're not going to go invest it into what great grandfather was invested in. They're going to invest it into crypto. So when I think and look at the market cap of crypto overall and seeing that it's at 1.47, and this is what I mean about how I'm jealous of those that are starting off and are finding interest and are getting into it. You guys are coming into something that is like a month and a half ago, we were at 2 trillion dollars, and now we're at 1.4. And these prices that I'm seeing, it's like, I didn't think that it was going to be here, and to think that right now you're getting into an investment opportunity where you can buy this for this price in December, completely different story. So I have to say, you guys are getting in at the best time. I wish I was getting in now. So yeah, I guess if you guys don't have any more questions, we could wrap this up. Thanks to everyone that came out here, and Alejandro wants to add something, but I'm gonna say this: if you guys, the first five people that share their Algorand address, I'm gonna put your name in a little fishing bowl, okay? And I'm gonna take out your name, and then I'm gonna send you guys some Algorand. So the first 5 that share their address on the group chat, I'll put your name in the fishing bowl, and I'll do a video, put it in the chat, and I'll pick out the name, and whoever name I pick out, I'll go and get your address, and I'll send you guys some Algorand.
I have a quick question, Sahid.
Absolutely.
Um, so it seems like the Bitcoin dominance is up while Ethereum is going down and the altcoins are bleeding. What do you suggest to long-term investors like me that, you know, are kind of tired of buying the dip and, you know, just waiting off on the sidelines? You know, what could we do? Like, should we trade? I know you mentioned staking, but most of, well, personally, my coins, not all of them have rewards or staking options. So what do you suggest in this time
So
period?
so based on, I mean, based on my experience of how I set my portfolio, and if I could go back and change the things I've done, I would absolutely most definitely keep most of my, dominance and percentage in Bitcoin and Ethereum, due to the fact that that's the catalyst that moves everything, right? And Alejandro, once I finish here, he'll go a little into when it comes to Bitcoin and then alt season, right? There's two different things. So normally things are flowing into Bitcoin, Bitcoin starts to rise, and then we go into an alt season where they're now all the alts are going off and moving up. So in terms of my strategy, there's so much, there's only so much money we have to buy the dip, right? Obviously the top three is Bitcoin, make sure you have Bitcoin. And Ethereum, obviously, for those starting off, build your portfolio on those two. And then you start looking into the other projects and invest into those that you really feel confident and you also want to hold for the long run. And obviously during these moments, just dollar cost average. I know it's emphasized everywhere. It's emphasized in the different group chats that we're in. And that's essentially just making sure that your position and your average is good. But Bitcoin and Ethereum for those starting off, and even for us that already are well invested, just rack up on Bitcoin and Ethereum, but mostly Bitcoin, because you got to remember, even though we're going through a really difficult time right now, just buying Bitcoin and just having that as a store of value, we know it's going to go up. It's not a matter of if it is or isn't, it's a matter of when. So right now, just if you have some money, put it kind of like, break it down in percentages. And the altcoins will be based on the movement of obviously Bitcoin and Ethereum. So that's kind of my 2 cents. I don't know if that helps. Also, we could go into Alejandro, we could go into the website where, remember, you showed me the graph in terms of Bitcoin and altcoin, and we can kind of, I guess, go through that. That probably be helpful for Stella. And you're muted.
I keep forgetting. If you want to go ahead and look up alt season index, and while you do that, anybody who sent their address, make sure you go ahead and send it into the Telegram group, because we're gonna be once we close this down, I'm not gonna be able to look at it. So send your Algoram addresses to the group chat, or just DM us personally. So if you're a long time holder, yeah, you hold on to your Bitcoin. That's what.
So look at this. Take a look at this.
Yeah, that's what Bitcoin purists do. Before I get into this, just gonna you just hold on to your money. Hold on to your Bitcoin. Just hold strong. If you have any money to buy the dip, you can. Something that I always do suggest is if you see Bitcoin making some really crazy moves and it's going to new all-time high prices where it's a much larger price that it hasn't touched before, just maybe take a little bit of profit. You could do 20%, 15%, whatever you're comfortable with. You can take more if you want, because then you'll have dollars. You can put that into a stable coin like USDT. A stable coin is a coin pegged to a stable currency like the dollar. You can put that into a digital dollar currency like USDT, and then you'll have dollars parked in your wallet for when the dip comes. You'll be able to buy that with your profits. And that's always something I recommend. It's not a bad thing to take profits. Um, and going into what the alt season is. So the way that money moves in crypto, it's very simple. Bitcoin, again, it's the dinosaur. It's the one that everyone knows. It's the giant. Um, it's a beast. So when Bitcoin starts seeing some really big moves, a majority of the money is going to flow into Bitcoin, and that's just going to keep making it go up. And as Bitcoin goes up, it does have a positive sentiment in the market. So people generally also start to put some of their money into smaller coins um, with smaller market cap. So the entire market itself just starts to move up. But then what starts happening is that Bitcoin eventually gets to a level where it's just, you can almost say it's almost tired of moving up. It's moved up so much. It starts to only make small increments up or start to trade sideways where it just goes up and down and up and down. And during that time, people are also taking profits. And the profits that they're going to be taking, they're going to start risking those profits just a little bit more because Bitcoin is a safe investment. Once you start trying to take on a little more risk, you move that into the smaller market cap coins, which are the altcoins. And so then what starts to happen is Bitcoin just starts to kind of chill. And then the rest of the market, the altcoin market, starts to go up. And what you generally see are some fucking ridiculous moves. Bitcoin, if you thought Bitcoin growing up an average of 200% a year was was impressive, think about 1,000% within a year. Think about 5,000%. Think about 10,000% within a year. That's what happens in the altcoin market because these are tiny little coins, but it's incredibly risky. So, alt season. When people talk about alt season, they talk about money moving out of Bitcoin and flowing into altcoins. And if you guys look at this chart, the highs are where Bitcoin, there isn't as much money in Bitcoin. And you can see in the bottom where it says Bitcoin season. Lows are when there's a lot of money in Bitcoin. And right now, we've been trending more towards an alt season. From experience, Bitcoin is most likely going to start making some really big moves to the upside, which means a lot more money is going to start flowing into Bitcoin. So short term, what's potentially going to happen is all those little micro caps, especially the tiny, really risky ones, you might lose a little bit of money on those. The market itself is going to start moving up a little bit more, but you could still potentially lose a bit of money on those. And you're not going to see some really big moves on those. So what people generally do is they'll take their money out of those micro caps to the small caps and they'll move it back into Bitcoin. Right now, you can see where we are on the chart. And generally, it looks like we're in a downtrend. This isn't like super technical analysis. You shouldn't take this as like, as a pro chart. This is just kind of like a general kind of indicator of maybe where we are. I personally do believe, like Otis said, August is when the next bull run should start. I think it's going to start a little bit sooner. Next month, Ethereum is going to have a massive upgrade. I'm not going to get too technical because it is very technical, but Ethereum is going to have a massive, massive, massive update. And it's going to essentially change the way that fees work on it. And it's going to potentially make it deflationary. So some of the supply could potentially be removed from the circulating supply. And if you understand basic economics, when you have less supply, but the demand is still there and it continues to rise, the prices will continue to rise. And if that's not a bull indicator as to the market moving up, I don't know what it is. So I generally do see the market towards the end of the year going back up, seeing a really big move to the upside, Bitcoin hitting $100,000, Ethereum potentially hitting 10,000. I predict anywhere between 5 and 10,000. 10,000 could be a bit of a stretch, but who knows? Bitcoin 100,000. I'm not really one for predictions, but when it comes to that, I feel like that's a guarantee. It's possible that it's going to see a move even higher than that, maybe 120. Who knows? But yeah, I mean that's generally what alt season and Bitcoin season are. Just just flows, the flow of money moving into Bitcoin, moving out of it into altcoins. So if you're a long-term holder, just hold on to it, you know, and take profits whenever necessary. I can send some links, some great videos that kind of go over some of this stuff. Gives you a good idea of when it's a good idea to sell. I'm gonna make a note of myself. I'm gonna make sure I send that to you guys because it's a very good video, especially for beginners.
Stella, does that help?
Stella, okay. I'm gonna assume
I'm
that's you.
here. Thank you so much.
Yeah, cool. So yeah, that'll be the last question that we take.
Waiting for one more person to enter, and I will be doing that once I get it.
Yeah. Or you want to do it live right now?
Yeah, we can. Yeah, one person send their Algorand address, and we'll throw them in there, and we'll take it out.
I mean, you know, we're giving out to 5. We already have 4 people so far, so the 5th person who sends that Algorand wallet, you'll get some crypto. So that's not a bad deal. You know what?
Not bad for sticking around, right?
Not at all. I mean, for everybody who stuck around, I'm glad you guys stuck around because I hope that you learned a lot. I hope it wasn't like, I know that it's a lot to take in. I'm gonna go ahead and throw this in. If you guys send your Ethereum address, I will send you a surprise. And then I'm not gonna tell you what it is, but I'll tell you in the group chat after you get it. So just first 5 people to send me their Ethereum address, to send it in the group chat. It's a really, really, really crazy cryptocurrency, absolute game changer. It's at least gonna do a 2x move from the current price that it's at. It's at $7 right now. It's gonna go back up to $20, and it's potentially gonna hit 30, 40. I do see it going up a lot, and I'll explain to you guys what it is. So I just want to promote it because I think it's fucking crazy. So
I kind of have a feeling what it is.
I think you do because I talk about this a lot, man. All right. I talk about how much of a game changer it is. So it's not Ethereum. It's not Ethereum that I'm gonna send, but it's a token, and I'll explain to you how to see it too, because there are tokens that exist on the Ethereum network. All I have to do is send them to your Ethereum address, and then you'll be able to see them. So whoever I send the address to, I'll just DM you. I'll ask you what wallet you have it on, and I'll help you figure out how you can look at it.
All right. So the last one for Algorand was Melvin.
Nice.
Do we send the Ethereum link on here or in the group chat?
In the group chat.
Okay.
Yeah.
All right, here we go. I'm putting Melvin in. I'm gonna shake it up, and I'm gonna take one out. And I'm glad we're doing this here. I don't want people to think I have favoritism. All right, here we go. This is it. All right, I'm gonna shake it up. All right. Here we go. Let me see. All right, boom. Oh, look who it is.
Stella, the gangster Stella.
Hey.
Nice, nice. Once we're done here, I'll jump into Ledger and I'll send that to you. Make sure I get
Thank
the address
you.
here to the side. All right, guys, I guess we'll wrap this up. Thank you for everybody that stayed on. Like I said, it could be a little bit overwhelming, but you know, we're here to just help one another, guide each other, and you know, well, hopefully this community grows and we could help a lot of more people out. So
Sahid,
thanks for
Alejo, thank you
everybody.
so much. Thank you, guys. You guys did an amazing job.
Thank you. Thank you.
Awesome. It's been freaking awesome having you guys here. Absolutely cool. I'm gonna, to the people who sent me the Ethereum address in the group chat, make sure you DM me so I know where you're storing your Ethereum. If you have it on a personal wallet or if you have it on an exchange, because you most likely won't be able to have it on an exchange. So you can download a wallet and I'll send the token to you so that you can see it. You can see it there and have it there for when I send it to you. Okay, so if that's it then, you know, thank you everybody for joining up and staying till the end. I hope you guys learned a lot. Go ahead.
Bye, guys. Thank you so much.